I know you might be small, but I know you're mighty. That was a round of applause for these gentlemen. That's what I'm talking about.
All right, we got a big panel, so let's get right into it. So this one is the title of this panel is called "Solving the U.S. Housing Affordability Crisis with PropTech." Right. So we got fintech. Within fintech, we got PropTech. We're going to talk about construction tech, and we're going to talk about a bunch of things. So we're going to go down the panel. We got the panelists were just announced, so I don't have to do that. So Patrick, let me start with you. We're going to build something here, and tell us how technology is helping in the construction space.
Sure, Mike. Thank you all. So first of all, I want to set the stage with construction. I think most people know this, but McKinsey and others have done numerous studies showing that construction is one of the most antiquated industries in the world, right? Over the last 50 years, they've shown that productivity has been zero, right, over 50 years. Every other industry is up 2x, 5x, 10x. Construction has remained flat, right? So you're starting at a really low baseline. So tremendous opportunity for improvement with construction. There's a lot of reasons we can go into. I won't bore you with why it's been so stagnant. But I think with AI, with robotics, with blockchain, there's so much happening now that can keep up with the nuance of construction and real estate. So in 10 years, I think it's going to be a completely different landscape for productivity and construction. So first of all, something to keep your eye on. That's probably a little bit further out. But as most people here know, if you want to go build a building, whether it's a home, a condo, an apartment, whatever it might be, you secure the land, you go to an architect, you start getting some renderings, and you go to your contractor, right? And you get a price, and then that contractor goes to subcontractors who gets a price, and then you work on a schedule. You close on the land, you start construction. It's a 4, 5, 6 year process, right? When it's all said and done. But with AI, you're going to see automated planning and design very soon, where instead of waiting 6 months or a year to get a set of plans from your architect and design team, they're going to be using AI to automate that design. And you're starting to see this happen with facades and architectural layouts. But the big breakthrough will be when you're using AI to automate the plumbing, the electrical, the mechanical, right? The structural plans, making sure there are no conflicts right off the bat. And if you want to add a pool to the roof, right? If you want to move a bedroom, if you want to add a garage, right? You just type that in natural language and it'll do that. And it'll give you another set of plumbing, mechanical, electrical plans, right? These are things that usually take months and months to evolve. Are going to happen with the click of a button. So that's probably a little bit further out, but the technology exists today to do that. So then moving on past that planning phase is the estimating phase, where right now it's a very manual process, right? Where humans are literally looking at either paper plans or a set of plans, PDF on their screen, and they're manually determining how much carpet there is, how much drywall, how much paint, counting toilets, right? Weeks and weeks of process, right, of time. Now that's going to be automated with a click of a button. We actually have a company called Toggle AI. I don't mean to pitch it, but just so you know, that is actually taking 2 to 3 weeks of work and compressing it down to mere seconds, doing that estimation and bidding process. So that's already here, right? That's already happening, right? The next piece that usually happens in construction is the scheduling and logistics. Again, very mundane. You've got a whole series of different groups involved in this. Takes months. It's often inaccurate, right? Everyone jokes about construction always being delayed and over budget. Well, it comes down to this part right here. If you could theoretically look at the history of every job ever built, use AI to help predict the next job that you're building, you're going to have a lot more information to predict that actual timeline, right? If no human can remember millions of jobs, right? But AI can, and it can take into account a dynamic scheduling process. So that's going to be a huge improvement. Next up I'll mention is compliance, right? So you do all this work, you spend a year, whatever, your design team, you get a set of plans you like, and then you go to your municipal government. On average, it's 9 to 12 months to get a set of plans approved. San Francisco's 2 years. Go figure. So how can AI affect that? Well, if you think of compliance, it's basically math and ratios, right? In this convention center we're in, there's a certain amount of exits. Those exit signs right there are there for a reason. The amount of fire sprinklers is all based on the capacity of this room. It's a simple ratio. And believe it or not, those ratios are about 95% the same across the country and even the developed world. So once you submit your plans now to your municipal government, AI is going to start automating that compliance because it's math and ratios, right? AI and algorithms are going to easily determine a series of about 400 tests with a click of a button and tell you if you're in compliance or not, and then give some recommendations for how to put it in compliance. So big changes there that will dramatically improve efficiency. And then materials, right? Sustainability, another important piece to focus on. If you think of construction, there's basically three ways to build: wood, steel, and concrete. Hasn't changed in 100 years, right? Reinforced concrete was the last big breakthrough. But now all of a sudden you've got robotics, you've got 3D printing, you've got all sorts of new materials and composites and technologies, graphene, and all sorts of new things that are coming out that are stronger, that are lighter, that are faster, that are greener, they're less expensive, right? So you're starting to see these implemented, but you're changing, you're moving that massive ship, right? Because construction is so fragmented. Piece by piece, you're seeing developers and owners starting to take the risks to try these new materials. You're starting to see municipal governments and state governments accept new materials. That's a big part of it. So piece by piece, you're starting to see new materials that are more sustainable. And I believe with robotics, with more efficient designs, you're going to see humans start to focus now on creativity and sustainability, more livable, walkable cities, right, that are more welcoming to all of us. And they're going to be built a lot faster, right? The design planning process can be upwards of 20% of the budget. If you can reduce that to mere weeks, all of a sudden that 20% could either be passed on to consumers or it could be used on, and improving the architecture and design elements of the communities that we all live in. So very exciting time for AI, changing construction, exciting time how materials are going to start changing construction and real estate. And I'm very hopeful that in the next decade, we're going to have a much more efficient landscape in this space. Thank you.
Okay, so Erik, Patrick has built us an incredible, nice house in record time, with sustainable materials. We're in the house, and we said, you know what, we're going to sell it. Tell us about what's going on in technology in terms of the transacting, the buying and selling of property.
Well, unsurprisingly, the same tenet will apply. AI is going to hyper accelerate the amount of human capital that's required to settle a traditional real estate transaction. So at Propy, as an example, the transaction platform that we've developed currently in its iteration that's deployed to customers is taking 40% of the time, the actual human touch points, out of that workflow. Once we fully automate the system, I believe there's a point that we will get to the high 90s, but even with the next set of standards that we're looking at introducing into the AI model, we think it'll get to high 70s, possibly 80%. And so that alone will be a paradigm shift because that human capital requires them to get paid. And so we're already seeing the opportunity to have increased, transactions in a record amount of time. But more importantly, we believe that ultimately the recording and the escrow process can be, where we're going, it could theoretically be just point and clicks, simple, like 2-3 clicks, you could do it. We're nowhere remotely there. Patrick's vision of the world, that is a fundamentally broken system, and you didn't even bring up all of the touch points as far as each set of those plans has to have someone who's licensed look at it. So that's going to be massively disruptive. Where we'll get with blockchain driven and AI driven proof of ownership and deeds on blockchain, that will be a longer lead time, but I fundamentally believe that we will get there because it is a better mousetrap. I've said this several times, but it's just so perplexing to me. There are over 3,000 municipalities in the United States that govern title and escrow. There is no standard for the information that is captured by each municipality. So just that alone would give a better framework for us to actually be able to say, this is my thing, this I own. Right now, it's archaic. It just simply, there's got to be a better way. And that's why I believe in what Propy's building. But I believe that construction and prop tech will be massively disruptive because I said this stat earlier. There is no county in America currently that someone earning the minimum wage can afford the rent on a two-bedroom apartment. That is reprehensible for the wealthiest country in the world. And so we need to address this issue. And I firmly believe prop tech will lead the charge in that. 3D printing is a great example of that, modular housing. But we're going to be able to tackle this issue. We just need a coalition of the willing to get involved. And at some level, there's a public private collaboration opportunity there as well, because I think a lot of these communities are seeing the crisis unfold in real time. And Miami is a great example of it. Home prices and rental prices have exploded here.
All right, thanks, Erik. So now we've decided we want to sell the house that Patrick has built us. And the buyer needs financing. So I want to go to Dan and then Josip in terms of tell us what you guys are doing in the financing space.
Yeah, thanks. So at Fly Homes, we our core offering is we allow a buyer who needs to sell a home to be able to buy a home first before selling, which is 60% of home buyers have a home to sell, and the vast majority need to put that as a contingency in their offer. And they come to Fly Homes. What we do is we can provide them bridge financing, either on the buy side or the sell side, in order to buy the property first, take their time to sell their departing residence. And over the last 8 years that we've been doing this, we have gone through several iterations of how to do this more and more efficiently. So at the very beginning, we started out buying the property on their behalf and then reselling it to them, which was super inefficient. We had transfer taxes, we had multiple settlement fees, and et cetera. So how we've evolved is we now offer two types of bridge loans that are traditional mortgage, TRID approved mortgage loans, and we follow all of the state regulations, federal regulations, etc. We're licensed in 25 plus states, and we offer this exclusively today through a network of third-party originators through a traditional broker wholesale model, and that we have found has been a really efficient model to drive what we think is pretty forward-thinking innovation through the kind of templated model that we have today with state regulation, how capital markets are come about, and the secondary market works and things like that. And by following TRID and following state regulations and doing this quote unquote the right way, even though it's a less than 12-month bridge loan and we don't necessarily have to do those things, we found it attracts capital on the secondary market. It lowers the cost of capital. It allows us to do this way cheaper than anybody else. And we also have found a phenomenal implementation of the product for first-time home buyers, those that are going up against multiple offers on entry-level housing, which is still the case in most areas of the country, where they can turn their offer into a cash offer. We'll go in and offer them our bridge loan on the buy side, 95% LTV, allow them to refi that out after they move into the home into a traditional conventional mortgage or an FHA loan or something. And what that has done, even though there's a small transaction fee, they're typically able to offer much less than they would have needed to otherwise in order to win that offer. Or if they're the only offer, they can go in and bid below listing. And that's saved them quite a bit of money in the long run, 3 to 5% on average. And it's really opened things up for them, and especially with the NAR settlement, where many of them may end up having to pay their own agent, which is super prohibitive, right? And or they can bake that into their offer while making it a cash offer with no contingencies. And so it can counter the negative effect within our settlement for them. But all of that is going to come together to be able to provide a really efficient solution for these first-time home buyers, as well as those that obviously want to buy before they sell.
Yeah. So before I go to Joseph, just a quick follow-up question. You mentioned the secondary market liquidity in this. Who are the natural buyers? Are these private credit funds, or these banks, or who's buying?
It's a mix of both. Because we're following TRID and we have the same kind of underwriting processes, disclosures, everything. Banks are willing to back these. Now they're short-term bridge loans, and so typically it's in a pool or a forward flow agreement where we're kind of repopulating or refilling that pool as loans pay off. On the sell side, when we do our sell side bridge, it's a second lien, and typically banks are still not loving the second lien bridge loan product, and so that's more in the private credit area. But there's still a fair amount of demand there, and what we've been able to show is a track record or data tape that shows, hey, the risk parameters on these are no different. In fact, they're actually a little bit better than what Fannie and Freddie are backing today.
Great. All right. So Joseph, tell us what Milo's doing in this space.
Yeah, thank you for having me here. So I run Milo. It's a company I started 5 years ago with the intent of being able to help people to access mortgages. People that I viewed as very qualified, but for a number of reasons couldn't actually get a mortgage. And we built the first crypto mortgage offering a couple of years ago, and really that was to help people that had amassed Bitcoin over the last, call it 7 to 10 years. And interestingly enough, you would say someone that has a lot of Bitcoin, they should be able to get a mortgage. And what we found is that it was very, very difficult, given some of the legacy archaic stuff around Fannie Freddie and the GSEs, where essentially that didn't count. So if you think about someone's got $2-3 million of Bitcoin, they've done a great job, they've weathered the ups and downs of the market, and then now they're ready to buy a home, move on to the next phase of their life, and they find out that someone's telling them that they have to sell it. They've got to put it in a bank. You can't tell the bank you've had it. You've got to keep it there for 3 or 4 months before. And that creates consequences for you. That'll create a taxable event for many people. 30% taxable event. You still generally believe Bitcoin is going to be significantly higher. I think most of us in this room strongly believe that. So now you're having to make a very difficult choice. Do I buy a home, or do I keep my Bitcoin? And what we saw is that many of these individuals that have amassed Bitcoin, they want to have both. And we decided to create that product to be able to assist with that. And what that's done for many of our clients now that we've got over 2.5 years of sort of track record around that, and collect thousands of payments and lent out tens of millions of dollars, is that it's a fantastic product for them. Primarily because they didn't have to pay taxes up front, they were able to defer it. The value of their home has gone up. We financed 100% of the transaction, so it's the only product where you're financing 100%. Outside of back in the 2007, 2008 days, right, with a lot of these mortgages that were 100, 105%. So it's the only product out there that you finance 100% of the transaction. And with that, they've been able to keep the upside of their Bitcoin. So I'll share a story with all of you. We had a client that bought a $600,000 home. It was one of the first transactions we did. In that particular case, that home appreciated to the tune that someone offered him $4 million for that home, a few years later. And but his Bitcoin went up as well, and now his Bitcoin's worth 3 times as much. But we financed 100% of that transaction. So what's the return for someone that just made $4.4 million but actually put $0? It's pretty good, right? So when you think about that, right, I think that these are some of the things where you think about, how do you solve affordability for some individuals? In this case, we wanted to solve it for individuals that have weathered the ups and downs of the crypto market, but at the same time help them move into the next phase of their life, extending credit to these individuals. And I think that we have seen that there's so much more that we can do in this space. We're just starting to scratch the surface of what we can do, and hopefully companies like Propy is able to do things so that you can create more efficiency, make this experience much more seamless for individuals. But there's a lot to do, and I think it's really, we're just in the beginning of this.
Yeah, no, it's exactly it. It sounds like from what you guys are saying, we're in beginning innings of a lot of this stuff. A lot of exciting things are going on in this space. So fantastic. We unfortunately are out of time. So I want you to thank everybody up here for your comments, and please join me in thanking our guests.